It's June 29th, 2009, at the federal court in New York. Journalists from all over the world have gathered to hear the sentence against an unusual criminal. He's not a famous mobster, nor a celebrity. He's a New York finance guru who just admitted to scamming thousands out of $65 billion. At some point, he was a respected chairman in the NASDAQ stock exchange. Now, he's the mastermind of the biggest Ponzi scheme in human history. For 40 years, he stole from banks, investors, celebrities, charities, and probably your grandma's retirement fund.
The FBI arrested him this morning.
As much as $50 billion is gone.
This is how one man destroyed countless lives and exposed the dark underbelly of Wall Street. This is the story of Bernard Madoff, the greatest swindler in American history. Bernard Madoff wasn't born a Wall Street villain. He started small, working as a lifeguard and even briefly attending college before launching his investment career in 1960. He founded Bernard Madoff Investment Securities and initially gained a reputation in NASDAQ trading. For those of you unfamiliar with NASDAQ, it's a big stock market in New York City. It's known for being the most active place for buying and selling stocks, especially for tech companies like Apple and Microsoft. Instead of people shouting and waving their hands like in old movies, all the trading on NASDAQ happens electronically. Investors can buy a small piece of a company. The prices of these shares go up and down based on how many people want to buy or sell them. In his company's early years, Madoff was a legitimate market maker, matching potential buyers with stocks. The other side of his business was taking money from individuals to invest on their behalf, what's called an investment advisory business. Bernie had a simple, effective plan to give his practice a boost. His father-in-law, Saul Alpern, was a successful accountant in New York. Madoff pressured him to convince his own clients to do business with the young businessman. As a supportive father-in-law, he proceeded to talk about Bernie's business in high-income circles. Soon enough, Bernie got busy. These referrals were a boon for the young Madoff. He was good at what he did and made good money both for himself and for his clients. Up until he made a bad trade and lost a significant amount of money. His father-in-law's clients who trusted him with their money were furious, especially after Madoff had promised them he'd never lose this much on a trade. Bernie Madoff was in trouble. His whole business and reputation were on the line. He also didn't want to own up to the fact that he lost all this money for his father-in-law's friends. He feared that if someone would speak out about their bad experience in those circles, they'd never trust him again. So he came up with a two-way solution. The clients that he knew would rat him out, he gave them their money back. But since he didn't have the cash to refund everybody, the less vocal ones never heard anything. He would frequently reassure them by fake trade receipts and ask them for more money. And that was how the world's largest Ponzi scheme began. Just like Bernie, scammers and shady companies online are waiting for the perfect opportunity to invade your privacy, steal your data, and put you and your loved one's safety at risk. That's why a trusted, reliable VPN is mandatory for a safe, enjoyable internet experience. That's when CyberGhost comes into play. With CyberGhost, you can bypass geo-restrictions and stream freely, knowing your data is encrypted and protected. With over 100 virtual locations, you can watch and access your favorite shows and services from anywhere in the world. With over 38 million users worldwide, CyberGhost is one of the most trusted VPN providers on the market. To use the VPN, all you need to do is connect to a server by clicking this big button. It finds the closest and fastest server for you. Alternatively, you can scroll through their list of locations and pick the one you want your virtual location to be. The app works similarly, no matter what operating system you're using it on. We've teamed up with CyberGhost to give you 83% off. All you have to do is scan this QR code or click the first link in the description. You'll also get 4 months for free. Thank you, CyberGhost, for sponsoring this video. It's a decade later, and the scene shifts. Bernard Madoff brings in David Kugel, a bond whiz, to handle the seemingly legitimate side of his operation. Kugel excelled in scouring the market to find bonds offered by companies that were priced lower than the company's stocks. He would buy the less expensive bond, convert it to the higher-priced stock, and then sell the stock, pocketing the difference. This price discrepancy is called convertible bond arbitrage and is a legitimate financial strategy. Just a few months deep into his job at Madoff's firm, Kugel is asked to write down the details of his trades and share them with him and his bookkeeper, Annette Bongiorno, who started working at the firm in 1968. Kugel gave her detailed index cards that she kept in a box. That box would later become the source of all evil. A year after being hired, Kugel opened a personal account with the firm's investment advisory business. When he received his first monthly statement, he noticed the details of the trades were strangely familiar. They were exactly the same as the arbitrage trades he had conducted for Madoff's legitimate business, but with different volumes. In the 1970s, an arbitrage trade would only be available on the market for a few minutes. Kugel's expertise was in finding and buying these arbitrage opportunities before other traders did. Once a trade was conducted, the opportunity was gone. There were no extra profits to be had because Kugel had already obtained them all. When Kugel saw those same trades he had personally made with the different figures and for different accounts, he knew it was impossible. Something's going on. This was the bread and butter of Madoff's scheme. One day, Kugel went up to Madoff and confronted him about the box and the fake trade receipts he'd found. Bernie knew he needed to keep Kugel happy, otherwise the whole operation's doomed. So he gave him an offer he couldn't refuse. Madoff allowed him to set his own salary, his own work hours, and most importantly, to keep him head of the trading department for as long as he wanted. Everyone keeps their mouths shut and works to expand the scheme. A big contributor to the scheme's success was his bookkeeper, Annette Bongiorno. As she was reading the paper, she had an interesting idea, less sophisticated than trading, but extremely efficient at the time. She researched old editions of the Wall Street Journal to identify the best performing stocks in the past month. She would then pick the most profitable, make up a number for how many shares the investor had bought, and record the gain at the end of the month in the client's statement, basically making successful trades with 20/20 hindsight. Even though Madoff was running this massive Ponzi scheme, his firm had strict, paranoid rules about it. Only a handful of people knew about the secret Ponzi account. It was completely walled off from his legit business. If two clients knew each other and compared notes, the numbers had to roughly match up. It was small enough that his firm could manage everything using tricks like Kugel's arbitrage and Bongiorno's record keeping. But they had a minimum deposit of $1 million to get in the game. This created the illusion of exclusivity. They made investors feel like having a Madoff account made them special, like you were part of an elite club. In reality, the exclusivity was entirely self-serving, a way to keep his fraud hidden in plain sight. What also made his fraud almost impossible to detect was that Madoff had originally opened the investment advisory business on the side. He never registered it with the Securities and Exchange Commission. Instead, Madoff masked his investment advisory business as part of his legitimate work. It was an open secret on Wall Street, but no one gave it much attention, as everyone was making money, or so they thought. Over the years, Madoff's firm grew to include his brother Peter and other personnel, making it one of the largest investment firms in the country. But as the firm grew, so did the lies. Things are on their way to take a wrong turn. The referrals Madoff received from his father-in-law kept coming, and soon they made up a large portion of the Ponzi scheme account. His father-in-law had since retired, and the accounting firm, renamed Avellino and Bienes, invested exclusively with Madoff. Business boomed for both firms until 1992. That's when the Securities and Exchange Commission contacted Avellino and Bienes on a suspicion that it was operating as an unregistered investment advisory business. The firm alerted Madoff about the pending investigation, revealing a deeper problem. Avellino and Bienes was essentially running its own Ponzi scheme. What's worse, the monthly statements it created for its clients didn't match the statements Madoff had on file. Basically, their lies are different from Bernie's lies. If investigators would want to compare the statements, they would reveal everything was fake. the account balances were off by more than $100 million. Madoff ordered his staff to redo 3 years of financial statements and strategies to match what Avellino and Bienes had on file. The commission was pleased with the matching paperwork, but ordered Avellino and Bienes to shut down. That meant all of its clients had to be issued checks for their full account balances. On paper, that money was in the possession of Bernard Madoff Investment Securities. However, there was just one problem. Madoff didn't have enough money to issue the checks, which totaled roughly $440 million. And if he didn't send the money, the commission was likely to take a closer look at his books. Resourceful as usual, Madoff borrowed stock from a rich client that he used as collateral to secure a loan and issued the checks. Madoff survived the crisis. Right after that, Madoff took on roughly 2,000 additional clients. With so many new accounts to fake, Kugel's and Bongiorno's techniques weren't enough. They needed a new strategy. The lifeline for Madoff's operation arrived in the form of Frank DiPascali. Starting as a young errand boy in 1975, he rose through the ranks, creating a complex strategy called split strike conversion. This involved buying stocks and hedging with options, a legitimate but unsustainable technique. But as expected, Madoff's scheme starts receiving hits out of nowhere, and one article would later lead to the biggest downfall on Wall Street. In 2001, 2 financial trade publications raised serious questions about Madoff's investment advisory business. Then it happened. In 2004, the Securities and Exchange Commission contacted Madoff to audit his firm. While Madoff had created thousands of paper documents to show his records were real, there was one area he didn't resolve, which was identifying counterparties. Madoff believed that since the commission was a government agency, it had a limited budget. He thought that if he listed foreign counterparties, the auditors would not get approval to make international phone calls to verify them. A Madoff employee researched a list of European counterparties, and the computer boys then randomly assigned them to each stock under audit. None of the foreign counterparties were ever contacted. The firm passed the audit. Then came 2008. Wall Street was collapsing. Firms were either merging or going bankrupt. Madoff's investment advisory business, the Ponzi scheme, didn't have enough money to cover the withdrawals, and his investors had requested a combined $1.5 billion withdrawal. Only $300 million was in the bank. On December 3rd, 2008, Madoff pulled Frank DiPascali aside and told him he's out of money. A week later, Madoff held the firm's annual Christmas party, where he handed out early bonuses. At the party, his 2 sons, Mark and Andrew, who had worked for the firm for several years, finally confronted him. They cut off all ties with Madoff and their mother, left the house, and called an attorney. That attorney called the commission, which then called the authorities. The next day, FBI special agents visited Madoff at his home. They confronted him about the accusation, to which Madoff confessed, "There is no innocent explanation. I've been running a massive Ponzi scheme." Madoff pleaded guilty and was convicted on March 12, 2009. On June 29th, he was sentenced to 150 years in prison and transferred to a federal correctional complex in North Carolina. In April 2021, he died at the prison's medical center. He was 82. To this day, his Ponzi scheme is still considered the biggest in human history. If you like our video style and curious about our animations, we made a package with over 60 assets, 3D animations, and pictures that you could use in any way you see fit, completely free of charge. Click the link in the description and claim our gift to you. Subscribe, and we'll see you on the next one.